We start the evening with AIM-listed Greatland Gold, the mining explorer and developer at the development stage of a world-class gold copper discovery in Western Australia. Haverion is a world-class asset, and Greatland chose to JV with Newcrest, Australia's largest gold miner. Newcrest are experts at low-risk development, and our nearby mill at Telfer makes Haverion a low CAPEX project. As you might expect, Greatland is already exploring for a further Tier 1 mineral deposit in PATERSON using advanced exploration techniques. It's working hard to become a multi-commodity mining company of significant scale. It's not doing too badly, as today the market cap is around £700 million. We're delighted to have the CEO, Shaun live with us from Australia. Welcome, Shaun.
Thanks, Donald, and thanks for having me this evening.
It's absolutely fantastic to have you this evening. Thank you very much for staying up so late to be with us.
It is a little bit late here in Australia, but yeah, happy to do so. Good to connect with you and the audience. Okay, swell. Look, we've got 30 minutes, so why don't I spend 15 minutes going through the presentation. An important event last week for Greatland with the release of our pre-feasibility study on the Havieron development, and that will leave us a solid 15 minutes for questions, which I think people will enjoy. So with that, look, let me just start by orientating people around the strategy of Greatland. There's three key pillars to our strategy. Firstly, look, expansion of Havieron. We want to deliver Havieron, a world-class asset, on time and on budget for the benefit of Greatland shareholders. In addition, we want to accelerate our commitment to exploration. We want to continue to expand that program. And of course, we want to invest in that drill bit and try to create value for shareholders through discovery. And then finally, the third pillar is that opportunistic growth. How do we augment what we have already in the portfolio by continuing to look to improve that portfolio, perhaps by acquisitions and other opportunities to add financially disciplined opportunities into the portfolio. The feasibility study itself, or the pre-feasibility study, is an important step for us, but it really is a first step on the journey. We commenced the decline earlier this year. This study is really designed to support that initial infrastructure going into the ground. As people would be aware, this first step is just on the South East Crescent of Havieron. That's this high-grade backbone that sits across this southeast. It's really just a fraction of the Havieron ore body, and indeed this study just covers a fraction of that Southeast Crescent, even really making it a fraction of our ore body. And such is the quality of Havieron that, notwithstanding there's only a small part of Havieron included in this study, it still delivers significant returns for shareholders, notwithstanding it's carrying all the CAPEX to get Havieron into development. And this slide really just shows that pathway to first production towards the end of calendar 23, and then full-size production into calendar 24. I talked earlier about this study is really just the tip of the iceberg. Even within that growing resource base, this only constitutes 28% of that initial resource. And I talked before about the return that this study still delivers of a 27% IRR and a 3-year payback. That's notwithstanding, to develop the Southeast Crescent, this small part of the ore body needs to pay all the CAPEX for the whole road back to Telfer, the power coming back, development of that Havieron permanent camp, and the decline all the way down to the ore body, and around 550 meters of development. So it's a substantial amount of CAPEX, and the fact that it still generates this return, this payback, unlocks all that free cash flow for us. Again, just speaks to the quality of the project. And again, we've done all of this with our partner Newcrest, which has 35 years experience operating in the Paterson, which gives them a lot of insights on cost structures. They're already operating in the Paterson, 45 kilometers down the road in Telfer. That's a big part of the center of gravity for the development of Havieron, and all those costs are very understood. So it also makes the reliability of this study, I think, very high. This slide is worth pausing on. We've also released our maiden reserve, and I like this this diagram of Havieron in the center there, because this helps hopefully portray what I mean by a fraction of the ore body. Yeah, the broader zonation is this grey breccia, and then we can see this kind of looks into that ore body and cross section from the southeast, highlighting the South East Crescent on this side, which remains open at depth. But just those red areas is what's being stoped, what's being mined out. So you can really see this is just a fraction of that South East Crescent, and gives you some flavour as to the upside, the growth that is ahead of us. The best of Havieron is yet to come. The CAPEX is exceptionally low, and I think that's really positive for us. The way this is being developed by driving into this high-grade Southeast Crescent is just tailor-made for Greatland as a mid-cap. For us and our balance sheet, we want a low CAPEX hurdle, a low funding requirement to jump over, and then get this high-grade ore through the mill, create free cash flow, and then we can generate that to deliver further growth. That's continuing to grow Havieron and continuing to fund our exploration activity. So effectively, by getting Havieron into production with this Southeast Crescent, Greatland becomes fully self-funding. With this initial $73 million that we need to fund, I think there's a great opportunity for us to engage with banks to bring this in. From a banking perspective, they also see this as low risk. It's brownfields development for Newcrest, leveraging that existing Telfer infrastructure, and that's an exceptionally modest value for a development to get into production. And what, again, talking, I think, to the quality of Havieron, the discovery of Havieron and the announcement of that HAV5 kind of first discovery drill hole, as we think about it, was in 2019. So it's been an extraordinarily short period of time to be here with the development already underway, the study complete. And again, I think talks to the confidence that we have at Greatland of putting this into production. And perhaps it also gives you a feel as to the approach Newcrest is taking into this and their desire to get Havieron ounces through the mill. And again, this slide really just captures the fact that we are leveraging this existing infrastructure, and that's what makes this low risk threshold to get into production, and makes that profile of CAPEX relatively low. That unlocks us into production. And the takeaway on this slide is really just that grade. 4.58 grams is an exceptional grade. And that really tells you why we're targeting this Southeast Crescent. It's a high grade ore, so it's going to generate really strong returns. And we'll talk about cost shortly, but that allows us to create a margin of over US $1,000 per ounce, which is exceptional. So turning to that low cost nature of Havieron, this is a cross-section profile of the cost of Australian gold mines. And you can see Havieron to the left of screen as we look at it. It's very much in that lowest quartile. And when you look at those Cadia, Fosterville and Tanami, those assets are all in significant portfolios, are really bellwethers of the Australian gold sector. And that's the company that Havieron keeps. It's an exceptional place to be in. And it tells you that Havieron operates through the cycle, which I think, again, is really important. And perhaps this is my favorite slide in the whole presentation, which again centers on the cost. And it presents that Greatland as a company would have the second lowest all-in sustaining cost on the planet. That's kind of worth pausing on for a moment, that we would be the second lowest cost miner on the planet. Again, it talks to the quality of Havieron, and with that, there's also some potential to walk down these costs from the study. This study does, we are going to continue to look at the study in more detail. And we've already announced that although this is a 2 million tonne per annum study, we're actually going to be taking a 3 million tonne study through to the next stage of feasibility study. And again, there's opportunities to walk down the cost with improved efficiency from that larger scale operation. And the study assumes that this is the only ore going through that Telfer mill. So presently just 2 million tonnes per annum going through a 20 million tonne per annum mill. If we can increase the volume of material out of Havieron, both from that South East Crescent and from the bulk opportunities across the rest of Havieron, we have a great opportunity of amortizing those fixed costs and that general administration cost across more ounces, reducing cost. And similarly, Telfer owns that Telfer ore body. For those following Telfer, or following Newcrest, they certainly are promoting the opportunity that they'll be able to continue the life of Telfer. And again, that will be more ounces, will reduce the cost for Havieron, which is beneficial for us. And again, hopefully brings more material into our economics. And similarly for Telfer, lower costs, provide that virtuous feedback loop that more Telfer ore will also be economic to bring through that mill. So good for both companies, good for both mines. This slide just really tries to talk about that expansion opportunity I've just touched on, that this study is just looking at that South East Crescent. The great expanse of that ore body is sitting inside that breccia. And as we continue to drill that, as we continue to understand that part of the ore body better, we get closer to understanding the opportunity to apply a bulk mining methodology across there and absolutely change gears to a much larger Havieron development. This is an important slide. This one, it just talks to that infrastructure that's being put in place with this initial Havieron development. You can see that decline down the left-hand side of that ore body. All of this CAPEX of that initial 400 metre through the Permian layer, and then down that 550, 600 metres across the ore body is all being carried by this existing 14 million tonne study. The potential to bring more ounces on these existing levels for extremely low CAPEX, and then expand it down a little further to bring in the rest of that South East Crescent is still only a fraction of the CAPEX that had to be spent on this initial development. There doesn't need to be a second haul road. There doesn't need to be another camp built. It's really just an extension of the existing infrastructure. And that tells you that the capital efficiency of that larger study is going to improve. And again, we're taking that 3 million tonne study through to the feasibility study. And then, of course, there's the opportunity to augment all of this with that further bulk mining study across the whole size of Havieron. I'm conscious of time, so I'll skip across this slide, but I think let's pause for a moment on this Havieron slide, because this is about that broader zonation. That red area there, that South East Crescent, is effectively that part of the ore body that is captured by this study. But that broader grey outline and indeed the extensions with the blue is that broader zonation. And as we continue to drill, what we're seeing is that Northwest Crescent, described as that northwest pod target, is starting to join up into that northern breccia to create this corridor of higher grade through the centre of the ore body, together with good intercept sitting outside of that area. But we're definitely seeing this northwest trend, which is a little bit of a feature of the entire PATERSON district. Then what's exceptionally exciting and something that we're spending a lot of time on is that eastern breccia target. This is sitting outside of the original Havieron area. It's a really interesting, it's a new intrusive, slightly different geochemical signature. Havieron doesn't need to get bigger to be world-class, but sitting there in the eastern shadow of Havieron, we're seeing another really meaningful feature. When you get 200-metre width intercepts, that's something that really captures our attention, and the overexpansion of that is some 600 and 750 metres. So exceptional to have that growth opportunity already within Havieron. Sustainability, look, I'd love to spend more time on this, but again, in the conscious of time. But again, I think we should have a lot of confidence in Newcrest as our joint venture partner to focus on this area. And they're certainly, from our perspective, it's something we really want to see a lot of focus on as well. I do want to pause on the exploration opportunity. We've talked about Havieron. There's also proximal targets. We've recently significantly expanded our footprint across the PATERSON. We want to continue to have drill rigs spinning across our PATERSON holdings. And we really like the option value that creates within our portfolio. For us, finding the next Havieron and applying our competitive advantages in looking undercover, in using that expertise, is really important to us. And indeed, there was an announcement today with Jury, which is the other joint venture here on the map, marked for the Black Hills deposit, with Newcrest, that we're moving to stage 2, which means Newcrest is seeking to put another $17 million into that project to continue exploration, which I think is good news for Greatland shareholders. The broader portfolio, again, we enjoy, particularly Ernst Giles, I've spoken about a few times, is our Archean greenstone, where a lot of Australian discoveries, gold discoveries sit. I think it's great to have that in the portfolio. For those following us, the team, we've spent a lot of time investing in the team. We've built that up. And again, it's all part of us having the ability to understand, to contribute to, with peer review, Newcrest, and scrutinise the development to make sure it's in the interest of Greatland shareholders. And with that, we've also added to the board. I think Paul Hallam's been an exceptional addition to the board, very well known in the Australian environment. So with that, why don't we try to jump across to some questions, but hopefully that gives you a really good overview of the company presently, and particularly this recent pre-feasibility study outcome.
Great, thank you very much indeed for that, Shaun. So the pre-feasibility study, all good. Why did you particularly plan to go down the early starter mine route? What was the thinking behind that? And did it come from Newmont, or did it come from you guys, or was it a classic JV?
Look, the joint venture is, has a, tries to create cooperation between Newcrest and Greatland, and we have a very good relationship with them. But I think the real driver here is that Telfer was coming to the end of its mine life. In 2024 is meant to be the last ore as Telfer is presently contemplated. Of course, I think there's a great opportunity for them to add to that life. But Newcrest doesn't want a gap here. They don't want to demobilise Telfer and then recycle it up as Havieron comes online. So there's been this big driver to get Havieron ore into Telfer by 2023. Part of the great benefit to us is not just the physical infrastructure there at Telfer, but the 1,200 people in situ with that 35 years collective experience up there in the PATERSON district. So I think it's in both companies' advantage if we don't have a gap here at Telfer, and we plough into Havieron quick snap, and that's what this study helps supports.
Does that add weight to the 3 million ton study being a possibility then that you were mentioning?
Yeah, look, this study is based, that's been released, is on a 2 million ton study. To some extent, it's already out of date as it's been released, because we're flagging we're taking something 50% bigger, being a 3 million ton study, into the next round, the feasibility study, which is due out around this time next year. And then, of course, augmenting that, we're looking at a much broader mining program with the bulk mine. So really, this is the best of Havieron is ahead of it. And I did hear Sandeep from Newcrest describe the other day in the Newcrest call, the economics only get better from here. That's exceptional to have a study that's so strong already and really just see upside ahead of it.
Perhaps we ought to talk jury stage 2, and 17 million or more of Newmont money going there. You guys are serious about this, aren't you? You're really, really going fast and hard.
Yeah, look, absolutely. Look, I think it's, we see our presence in the PATERSON as multi-layered. We've got the Havieron, obviously the jewel in the crown and the flagship asset, and that takes a lot of the focus. Then we have further exploration with Newcrest, and we like working with that team. They've got a lot of experience, and we learn from each other through that, and we've got a huge amount of respect for them, and we're delighted that they're taking jury through to the next round. And again, it reflects some confidence that we have in the ground there. We hit some first mineralization there recently. It's always nice to know that the rocks there are carrying some level of mineralization. And then thirdly, we have 100% owned ground. I'm particularly fond with that, and as some shareholders would appreciate, we currently have the rig spinning at Scallywag, our 100% owned tenement, as we speak. So we're excited about that program into which is going to move forward to the end of this calendar year.
Okay. Jonathan Dixon asks several questions, but one of them is about your funding options for the $73 million that you mentioned. That's your share of the joint venture due. How do you propose to raise that? Bank, or is it debt or equity essentially?
Yeah, look, it's a great question, I think, by Jonathan. The overall funding, if I take a bit more of a moment to explain it, is about 123 million US. Now, 50 of that is being provided by the existing debt facility, which is drawn for about 20 million, and we have 30 million remaining. That gives us a lot of runway. That's meant to take us to around this time next year, to about September, October 2022. So there's no particular urgency in further funding. So time is always valuable in these circumstances. But what we'd like to do is engage with the banks. We've already had two or a couple of term sheets given through to us by major banks. We want to continue to engage with them. Really, the banks are lined up around the block to fund something like this. Brownfield, Newcrest quality, tier 1 asset in Australia, which is a tier 1 jurisdiction. It's right down the fairway for the banks. So what we'd really like to do is bring them in, complete a full funding package, and that perhaps covers that entire 73 million. And again, we've got the time frame to do it. And such as the quality of this pre-feasibility study, not just the outcome, but the amount of work that's gone into it, and the ability to leverage the existing infrastructure and the existing known cost structure, gives the banks a lot of confidence around the quality of this study, which gives us every opportunity to actually bank a pre-feasibility study, whilst normally you'd have to wait for the final feasibility study. I think we have every opportunity to bank that ahead of schedule. So something to look forward to in the next, say, 6 months. So
listen, folks, that's what you've just said is very significant, isn't it?
Yeah, look, I think it's exceptional to have a discovery in 2019, and in 2021, having already started the decline down, and then having such a low threshold of CAPEX that is into production, and then we're generating that free cash flow that we can reinvest into Havieron. Again, tailor-made for the balance sheet of a junior or a global mid-cap. And we should really be popping champagne corks that, you know, that with our partner, we are charging into this development, you know, rather than sitting back and maybe unlocking the whole Havieron, which we're all terribly interested in seeing. But of course, that would, if we sat back and studied this to death and drilled it out like a bin cushion, it would add time and cost before we got to that free cash flow event. So I think for us, it's perfect.
So before we lose you, Newcrest Mining can apply to buy a further 5% of the project in December. This is another one from Jonathan Dixon, mentioned by a few others. How on earth can you get an accurate fair market value worked out when there's still so much infill drilling and developing of the asset remaining?
Yeah, another good question. Look, you know, it's interesting. I've come in kind of post that original deal being done with Newcrest, and naturally you see the strengths and the weaknesses of transactions when you come in. You know, it's interesting looking at the option being exercisable in the current period because Havieron's still in this growth phase. The good news is, I think in this is, you know, it's something that's got to be worked together between the two parties. The pre-feasibility study, as we said, only covers really a fraction, well, indeed a fraction of this ore body. So when you're trying to understand the market value of the asset today, look, you have a great citer there with the pre-feasibility study in terms of low CAPEX and low cost. But what do we really want to add to that study? We want to add a lot more tons, a lot more ounces. And that exploration program does show you that, look, there's a lot of opportunity there on the South East Crescent, and then the broader, you know, bulk mining opportunity. So the opportunity is to try to add value across those areas as well when thinking about what is the full value of Havieron and as such, what's 5% worth. But there's no doubt over time that becomes more and more apparent and lower risk to achieve. So with ongoing drilling success. So you know, I think the more drilling that gets done, the better positioned we are in respect of that option.
Okay, a very brief last answer. Sorry to rush you. This is absolutely fascinating. What do you expect to see in the next 6 to 8 months? What can we look forward to?
Yeah, look, I think it's a really busy period. Yeah, some 50,000 meters of drilling have been completed since the cutoff of this pre-feasibility study that we already have. A lot of that's been announced. We have in the next couple of weeks, we have an updated exploration announcement. We're looking to update JORC resource and reserve statement in the coming months. That's really significant. We talked about the funding program going on, and then that all leads into the updated feasibility study. So, you know, there's a huge number of catalysts and a lot of work happening over the next kind of 6 to 12 months, and I think that creates a great opportunity for Greatland and its shareholders.
Shaun Day, CEO at Greatland Gold, thank you very much indeed for joining us live from Australia.